Let me get to the floor show. We've added a bunch of voices to this. We have traders at the New York Stock Exchange and the CME. Charlie Gasparino is back, and we also have Jordan Kimmel with us. Jordan Kimmel of Gitterman Wealth Management Portfolio. Jordan, give me first your assessment of why we are continuing to see such massive chop this week and last week.
Well, I don't think it's really people trading right now. What I think it is, it's computers trading against computers, and that's what kind of scares me. And what I think happens is, you should actually see some value in things as prices go lower. Way algos are set up and moving average trades are set up. The cheaper something gets, the more these machines want to sell it. And if you remember 87, they just couldn't get the machines to stop. So we're at decent valuation. But the fact is the market looks more dangerous than it looked when it was peaking. It's just absolutely scary right now.
Okay, wait, Tim, I get a little weirded out when people bring up the algos because humans have to input the information, don't they? But that said, maybe, Jordan has a point here that they may have the sell button ready, but they don't have the buy button when they start to see some real value. Are you seeing any pickup, any sort of bottom feeding here?
There might be a little bit, but I also think that we're 2 weeks from the end of the year, and you're just not going to see a tremendous amount of new money making serious commitments on the buy side. I think a lot of big managers and even hedge funds are saying, okay, look, this year is what it is. I'm just not going to make a big commitment until we get into January, until one or two of these multiple points of uncertainty clears the air a little bit. Now, that being said, we could easily get a little bit of a trading rally next week, maybe if the Fed doesn't hike, or if they come out with what some people would call a dovish interest rate hike, where they hike and make statements giving you an impression that they're probably going to take take a pause the next couple of meetings. So, but that would be a trading rally, and that would likely be caused by the sellers that have been leaning on the market very heavily for the last 3 weeks, taking a walk on the sell side and having very little supply. Okay. If stocks got any momentum on the way up at all.
You pointed to me?
Oh my God. Let's talk.
We just do this.
When I don't want him to talk, he talks. I want him to talk, I'm like, are you talking to me?
Where should I begin? I agree with your last guest, but for this reason, there's too many question marks and uncertainty around this market now to be, if you're a money manager, to be making a big bet. I mean, we don't know what's happening with trade. It may turn positive. We don't know what's happening with interest rates. He may have to raise. And by the way, I don't know some of the positive stuff that Powell has said about not raising in the future is already kind of priced in this. So I don't know why you put your money to work now if you're a big money manager. I will say this. It kind of reminds me of the sentiment that was going into the financial crisis in December 2007. Everybody thought, hey, the market's going to come back. The Fed's going to lower rates. And the Dow was pushed up to, I should say around October, November. Dow was pushed up to then a historic high at 14,000. And then, as you know, what happened next? The markets are often wrong in the short term. And maybe we're just seeing a market that's looking at everything negatively, just because of the way the sentiment is. And, corporate earnings next year might surprise. Fed pulls back a little bit. The trade thing isn't so bad. And guess what?
Wait, hold on. Just as Tim said, he's starting to see a little bit of bottom feeding, meaning people picking up deals. We're now down 492. That's an ugly number in and of itself, but we had been down 558. I do want to point out the U.S. dollar. This had been a slight problem because it was getting very strong today. I believe it had hit about a nearly two-year high from the previous week. But now the Commodities Futures Trading Commission is saying that U.S. dollar net long bets, meaning the bullish bets on the dollar, have just pulled back after a nearly two-year high in the previous week. I think that's interesting, Jordan.
Well, I have to talk about what Charlie said here, because, what happens is an old expression, you pay a dear price for a rosy scenario. And, what happens is when things are uncertain, people are afraid. You have to buy fear. And if you're only buying when there's no uncertainty and everything looks great, you're paying a high price.
Okay, hold on. Jerry Willis, you're on the floor. What have you got here?
I got to tell you, the leaders, the laggers, laggards tell you everything you need to know about what's going on in this market today. Take a look at the leaders. Procter & Gamble, consumer non-discretionary all week long. People have been talking to me about a flight to safety. Doesn't get any safer than Procter & Gamble. Caterpillar up as well. That's interesting. Would seem to suggest fewer trade worries. Don't know, but it's higher. Look at the laggards, though. J&J. This has been a story stock all day long. This company plunging the most since July 2002. And why? Because of a Reuters story that the consumer products giant knew that its talcum powder contained asbestos, which, of course, is a cancer-producing agent. So big issues there, bringing the rest of the market down with us. J&J saying, hey, it's an absurd conspiracy, what Reuters is saying. Back to you, Liz.
Okay, let me take from the NYSE all the way to Chicago in the CME. Ira Epstein, give me the one thing you will look at in this final 2 minutes of trade that will give you an indication of how Monday opens.
Well, if the market plunges, I'd look for a stronger Monday. I know that sounds crazy. So what I'm looking for right now is the market to basically get some short covering. That's what I'd like to see. The algos that have been pressing it just step away from the market. Otherwise, who knows where you go. But this is a free fall right now.
Well, down 481 for the Dow, S&P down 47. Check it, the NASDAQ down 148. Phil Flynn, oil has certainly dragged down the entire energy sector today.
It really has. And if you look at that, it's on concerns about growth, but also the stronger dollar. And I will say this, as bad as it looked today, we've been in this trading range for, basically since Thanksgiving when prices really collapsed. So just like the stock market, the oil prices are hanging, like you said earlier, they're hanging on the ledge right now of a very important part. So I think what's going to happen next week is lots going to have to do with the Fed next week, a lot of those worries. But I think holding where we are right now really bodes well going into next week.
Okay, the Fed is going to, I make the prediction, act hawkish, meaning they will raise rates, but talk dovish. Jordan, you got 20 seconds here. Can somebody give me a one-year Dow? Because we're looking at whether we're testing those February lows at the moment. It can be Dow or S&P. I don't care. Jordan.
I don't think we're much higher next year. I think it's a struggle. I think that there's a lot of volatility, and you just want to be patient and not lose your head. You can't trade with emotion, but the market can't go up all the time. It wouldn't be realistic. So I don't think we're in for a banner year next year. I think we've been fighting to stay even this year. It's a tough year.
And that from a bull, Charlie.
Yeah, I think it's all based on stuff that's out of our hands right now, and it's in President Trump's hands, trade, and also in the Fed's hands. I mean, those are the two things. If the Fed lays off and we get a decent trade bill, I mean, I don't know what's stopping the market from going higher.
Right.
I mean, that's the reason why we flatlined literally since last year is because of trade.